the probability of Bitcoin realizing its potential and more than 10xing is dramatically higher than the market is saying.
What's up, everybody? Good morning, good afternoon, good night. Welcome to another edition of BitLab Academy. I have got an incredible guest with over 30 years of experience in these markets. Now, obviously, major evolution has happened in the last 14 years, and he's got a wealth of experience. I couldn't be more excited to introduce you to Mr. Dave Weisberger, the chairman, co-founder of CoinRoots. How you doing, sir? And thank you for being on.
Well, I'm doing great, You know, hurricane's gone, and now we get on with our lives again.
So I'm just going to start off with a bang because, you know, we're going to keep it a little bit short today. It is Saturday for everybody. Thank you all for tuning in. With your, decades of experience. And now, of course, we have this new market that everybody wants to think is different. There seems to be a little bit of confusion about October. It's not going up. It's not going. Is this being held? Is this being suppressed by the uncertainty specifically from the election? Is it a combination of that with what's going on with the Middle East? Is it a combination of uncertainty with what's happening with rate cuts? And is a recession coming? What are people to make of what's happening in the market right now with Bitcoin? While S&P 500 is still pushing up, but we're just seeing to be holding in this range that we've had for the last 7 months.
Well, I think you need to break Bitcoin away from a lot of the rest of crypto, so we'll do that. But the notion of October, I always thought was kind of funny. It's really the back half of October. It's really the beginning of the fourth quarter rebalancing of funds is what generally does things. But even before you talk about that, you have to talk about price drivers. So who's the driving force and creates price discovery in a market? That's really the question. Now, in Bitcoin historically and in all of crypto, it's been leveraged money. It has been people who see this number go up, and then they FOMO and they push it ahead, and the sellers stop, et cetera, et cetera. We've had 8 months where none of that has happened, or at least every attempt to do that has been met with failure. Now, the thing is that you need to understand something. Everyone trades need to understand. And I hate this analogy because I've had 3 dogs, I've never done it. But if you whack a dog on the nose with a newspaper when they do something bad, and you do it to them every single time, eventually they stop doing it. So leverage traders who have tried to storm ahead and FOMO in on the upside every time we've had a mini rally since the all-time high was the pseudo all-time high was reached. Inflation adjusted, it really wasn't, but whatever. But since that all-time high was reached in March, have gotten smacked on the nose with newspaper. And so you're seeing the leverage players much more reticent, much more cautious of jumping in, which is why you haven't seen these big God candle types. But now at the same time, it's also caused volatility to be muted because we do seem to have accumulation going on. And, there is a bid. You would have thought with the Iran news, Bitcoin being the only thing available for selling, that you would have breached well below 59,000, yet we didn't go below it. So to me, there's a bid there. And it's very dangerous to short at this point. The question that we don't know the answer to is how much more of these large sellers, rumors of whale wallets, rumors of the U.S. before the election selling Bitcoin that Trump has said he's going to put into a Bitcoin reserve. I mean, the crap that's going on is crazy. But the fact is it keeps a lid on it. And so we have not seen almost any of what would normally be the drivers for a crypto rally. So why am I so bullish? Well, I'm bullish because there are a lot more people ready to allocate assets to the asset class. And we could talk through why that is. I've always said, and I said it, I think, I'm on Macro Monday with Scott Melker. I've said it the last 2 weeks. I said, listen, it may be an old saw, but it's true that big asset allocators wait until after the Jewish holidays to start allocating assets. It's been that way for, a long time now. And that holiday is tomorrow. So next week we come in fresh. There's no longer any excuses. I suspect we will start to see, and I think the market is kind of jumping the gun a little bit today. You're kind of seeing the beginnings, with Bitcoin tickling up against 63, as opposed to it was almost below 60. It was actually below 60 last night. Ordinarily in most assets, you consider that a big rally. In Bitcoin, it's ho hum, we don't care, kind of thing. So I think that there is a reasonable chance that Bitcoin will start to outperform other risk assets. That, and I say it that way because right now Bitcoin is still a risk asset. It won't be at some point in its future, but it is right now. So that's sort of the way I look at the narrative. Now the S&P is different. When you ask yourself the question, why is the S&P still hanging in there? I mean, part of me is thinking that corporate profits are going to have problems. With the backup in rates has been a big problem. I mean, you look, they cut interest rates, the short rate and the 10-year bond rate are up 30 basis points, and they cut the short rate by 50. Well, that's a big move. And a lot of companies, that's going to be going to affect where companies are actually borrowing. So there's a lot to work out in this economy, and it could be talked about. But I personally think Bitcoin outperforming stocks in the back half of the fourth quarter seems to be a pretty good trade. But every time people have shorted the stock market, as long as you're printing more money and there's more liquidity coming in, everything goes up. And so shorting it has not been a profitable trade.
I mean, there's so much to unpack there. One of the things that I worry about is, I pulled this chart up while you're speaking. This is Bitcoin versus S&P 500. And one of the things I do worry about is this consolidation that we've seen for 7 months with multiple 20% move oscillations, in this range that we've been in. Previous all-time high, sure. Post-halving consolidation, sure. But we've seen this massive performance by the S&P 500. My curiosity here is, all I look at the previous cycles, and you look at these previous cycles and you see, okay, every previous cycle, let's pull up to having progress. We've had this consolidation. What's that?
Yeah,
We've had this.
You finish, but I want to add something.
But we've had this consolidation range, and obviously this also we've seen tied into the global liquidity. But coming back to the S&P 500, my fear is everybody's so focused on this repetition of Bitcoin should be going up. Even me, I have a bias towards it, and I'm aware of it. Should be going up next, but what happens if we start getting an actual decent sized correction on the S&P 500? Is this buoying what could have been a bigger pullback in in Bitcoin and crypto? If this does start to break down, do we then see that large correction that some of the perma bears have been calling for?
It's possible. I would say this: there are a few factors that are cross currents that are important here. First of all, we've had quite a bit between Mount Gox and the Germans and other whales. We've had quite a bit of supply come on the market at a period of time when when the new demand from the ETFs had more or less stopped. And now understand the demand in the ETFs is always thought it would be in waves. The first wave, which did happen, were hedge funds. And the next wave that's just starting are registered investment advisors, financial advisors, who not all of which have access, but take many months to start adding them into their investment thesis. Sorry. But so to get back to the point about it, so there's the two answers to your question. Answer number one, if you have a serious correction in the stock market, correlations go to 1 and everything will fall. So that is true. It always is. And it's because of a very old fashioned statement. People don't sell what they want to sell. They sell what they can sell. And Bitcoin is liquid, so it will go down. That is true. But that said, an orderly retreat in the stock market where Bitcoin outperforms is completely fine, not a big deal. If you get a 20% fall in the stock market in a couple of days, everything is going to go down in those days. So it really depends on what you're talking about. So if there's a major geopolitical event that causes people to start selling everything, that's fine. That said, every single major geopolitical event, short of a nuclear war, if you sold it, you were very unhappy within weeks. Going back for a very, very long time. Because what is the response of the financial markets to a major geopolitical event? And the answer is they print tons and tons of money. And therefore, what are they engineering? They're engineering asset prices to go back up. What's going to be the biggest beneficiary of asset prices going up in terms of printing money? Well, honestly, in the long run, it'll be Bitcoin. So I would expect that to create outperformance. So even if there is a drawdown, if it's because of a reason where there's panic and the government starts to print money, then that Bitcoin will be a beneficiary. I mean, the simple fact is that when Powell cut 50 basis points, he re-put back into the vernacular the Fed put, i.e. people saying, well, the Fed's not going to let the market correct that much. I personally think that's nonsense because he doesn't care that much about the stock market. Politicians do because there are a lot of people in America living off of their stock holdings, their 401ks. But I don't know that the Fed cares about small corrections. A massive correction, yeah, they would care a great deal.
And forgive me if I'm misquoting you. I believe that it's you that says Bitcoin is an adoption. An option on future
Yeah,
adoption. And could you
that's a,
speak a little bit
that
to
is
that?
Yeah. So think of the numbers. So here, if you want to understand, if you're a fundamental analyst, now we're not trading anymore. Now we're not looking at, oh my God, it looks over the 4-day RSI versus the 4-hour RSI against the 20-day moving average, the 200-day moving average. And we're not talking about anything. Now we're just talking about fundamentals. So how do you value Bitcoin? Well, it's really easy and we all understand it. There are two numbers that we care about as Bitcoiners. Number one is, will Bitcoin become digital gold in the sense of that gold represents more or less somewhere around 8% of monetary aggregates. Keep in mind, in 1971, it represented north of 90, almost 100% of monetary aggregates. But Nixon closed the gold window. We went to a fiat standard, i.e. governments could print money as much as they want. And if the bond market didn't discipline them, they could continue. The U.S. as a global reserve currency doesn't really get disciplined. The UK, they've had a fair amount of having their nose smacked with newspaper too. But the reality is that Bitcoin as digital gold, what does that mean? Well, the price would have to rise by 10 or 15 times. You'd be looking at a price somewhere north of $600,000 if Bitcoin reaches digital gold. In my mind, it's a binary probability outcome over the long term. And that is like an option. So when you're buying Bitcoin at 60,000, what you're buying is the potential that it will go past 600,000, right? And you'll get a 10x on your money. And if you're wrong, does it go to zero? Probably not. It's probably a niche thing right now. I don't know what your downside risk is. So that probability of adoption is what you need to keep your mind on when you're valuing Bitcoin. Now, ask yourself the question. So, and that's digital gold. To complete the story, just so I go back to why it's an option, is the second possibility is Bitcoin becomes the denominator for all global assets because we're going to go to a internet-based digital standard and it'll be everything. And that's Michael Saylor's case. And now we're talking into the double-digit millions of dollars, right? And when you start looking at that, those numbers are just so extremely high, it's almost not worth thinking about. But it is a possibility. It's what people in the financial markets will call the right tail, or the good part of the distribution. Very low probability. Markets assigning essentially a zero probability to that, which is why Saylor buys every time he can. The market's assigning less than a, what is it, like a 7% probability or something like that on Bitcoin becoming digital gold also. So now let's compare today, where we are on October 11th, of 2024 to where we were when we were at roughly this price in 2021. Well, the hash rate in the Bitcoin network is 5x. The number of wallets is dramatically higher. We have BlackRock, Fidelity, Bank of New York, and others all talking about Bitcoin as an important financial asset. We have people who are in the financial system saying that. That kind of acceptance becomes self-reinforcing. And I would say that at this point, the probability of Bitcoin becoming digital gold is probably pushing 50%, and the market is valuing it at a much smaller number than that. So to me, as a poker player, betting on Bitcoin, and this is not financial advice, people, I'm just telling you the way I look at it, is more or less the same as pre-flop in a poker game when you look down at pocket aces and you have the chance to move all in. And I don't mean moving all in where you're worried about scaring people out of the pot. I mean calling all in when you know that unless he has the exact same hand as you, you're a 6-1 favorite against any other hand. And to me, I would do that every single time. Now, I also don't put my entire net worth on a poker table. So do not interpret what I'm saying as put all your net worth in it. There are a lot of people in the internet who will make those interpretations. What I'm saying is, from a fundamental point of view, the probability of Bitcoin realizing its potential and more than 10xing is dramatically higher than the market is saying. And that's why I said you have to value it as an option. And that's why I kind of, don't care about squiggles for my investments. Now, if I'm trading, that's a different story. Trading is a totally different story. That is the part of your portfolio where you're saying, okay, I'm going to buy for a quick scalp or I'm going to sell for a quick scalp, but I'm always going to revolve around a core long-term position, which is what I'm comfortable in my portfolio allocation to Bitcoin. Does that make sense?
I mean, it makes so much sense, and just not for a visual sort of cue for everybody that might be having trouble understanding. And this is not any TA or anything. This is just the orange is the rate of adoption for Bitcoin as overlaid with the timeline of the internet. And this is outpacing, which makes sense because now we have interconnectivity, information spreads faster, but also where we're at, I think, in the world. And this, projection suggests that somewhere between 2029 and 2031 will be roughly at a billion users. Even if we got half that, that's a huge increase from where we're at now, just on the increase in the user base. And people like Peter Schiff that says this has no utility. Well, how can we have this sort of increase in one utility user base, but also the broad array of things that I think people that just look at this as a financial asset, I really think that they're not understanding that the other technological impacts this has on power grids, or how can Meta or Google or
There's
Yahoo
so much
be
there.
important companies when they're basically computer infrastructures. This is the strongest computer infrastructure in the history of the world. How is there no value?
The simple fact is, well, there's two facts here. Fact number one, that Peter Schiff in his brain has a place in his brain which literally can't compute the idea that something that is purely virtual can have value. His son has even made that critique of him. So Peter, who understands monetarist economics, who understands the core value proposition for gold, can't in his brain understand how something he can't touch or feel can have value. Except the entire world is moving digital. If you've played a video game of any sort, if you've done literally anything, with the internet, you understand that virtual things can have value. So that's the problem with his brain, and it's literally either he's the world's biggest troll, which I often wonder, because I mean what he says makes so little sense, or he just cannot compute that simple thing. I used to say grok that, but now people think I'm talking about Elon Musk's AI, so we'll leave that aside. So that's the first fact. The second fact is, if you think about the amount of wealth created by technologies that serviced that rise in internet adoption, it is a staggering number. And only Michael Saylor has price targets on Bitcoin that are even in the same zip code as that amount of wealth. So think about the market cap of all the internet companies that private and public that would not exist if that hadn't happened. And now ask yourself the question: if Bitcoin does become the denominator of all these assets, what will that mean? And so the answer is a pretty big number. And so it becomes hard for people to conceive. But from a risk reward point of view, I think it's extremely positive. So that is literally the chart that I care about from a adoption point of view.
I mean, there's so much literal gold and digital gold in this conversation. Again, I don't want to keep you all day. For anybody that's watching Saturday, I do have something I just want to sort of ponder on with you for a moment. It's been very interesting this cycle that we're getting some of the probably the most fundamentally bullish shifts that we've ever seen in Bitcoin and digital assets, but Bitcoin specifically, with the advent of the applications from BlackRock and Fidelity, and then the subsequent approvals. And then immediately following that, quarter one, we had an astronomical, huge amount of appetite exhibited by actual purchasing of these assets, breaking previous records of the best assets in history before that, being 3 years to hit $10 billion in assets under management. We had two, both BlackRock and Fidelity, both did it in under 200 days, showing that appetite. In addition to that, we're seeing we have an election coming up, and this is one of the talking points within the election. That's major. But at the same time, we're getting almost the equal fudness of the Mount Goxing finally coming to some sort of resolution over this year, and 100,000 plus Bitcoin getting redistributed. The point being here is we're having these incredible, what could be bullish impulse driving mechanisms or narratives, while at the same time having the perfect amount of FUD that has been, which, we're kind of seeing in this 7 month range of sideways chop. Is this all baked? The reason I ask this is you've been in these markets, in all markets, for the better part of 30 years. Is this just what happens in markets? Does this feel a little hinky, like they're trying to release different things to meet the bullishness that's on the table? How do we make a sense of this as investors and traders?
Well, I think there's a few things in that question. The first one is markets do tend to humble everybody, which is it very rarely does what you expect, which is why if you think of there's a three-legged stool whenever you approach investing and trading. The if you literally don't have all three of those legs of the stool, you're going to fall over. The three legs are asset selection, i.e., what do I want to buy? What do I want to sell? That's what everybody focuses on. And so often, a lot of people's three-legged stool is a one-legged stool. And they got two other legs that are just as important for your long-term wealth. The second one is what is your portfolio construction / risk management. That's where you get to things like, well, what percentage of your portfolio should it be? Where should I set stop levels? What's my disciplined approach? What's the discipline here? I think it's going up. What will invalidate my thought process? Now, for someone who's a long-term holder, nothing basically is invalidating the thought process unless those numbers of adoption starts dropping. Right. But if you're trading or if you have an intermediate term strategy, then it could be a price signal that invalidates it, or it could be a law that blocks people from being able to use it that invalidates it. But the fact is, risk management, portfolio construction is extremely important. The third, which kills people, is actual trading. We formed a startup 7 years ago, not a startup now. Now we process literal double-digit billions of dollars of trades through our platform every month. But the fact is people need to think about trading. If you think your edge in timing the market amounts to, over a period of a year, 5%, that's a pretty big number. You think you can get 5%, and you turn your portfolio over 100 times, okay, which would not be crazy. We're talking about once every 3 days, or lots of people turn over a lot more often than that. So now ask yourself the question, well, what happens if it costs me 0.1% every time I trade? Well, the answer is you're going to be losing 5%, not making 5%, because you just cost yourself 10% because of the law of large numbers. Every time you turn over the portfolio, you lose 10 basis points, which is 0.1%. 10 times now it's 1%, 100 times now it's 10%. So big numbers can be lost. And that matters. So all three legs of the stool need to be there to make money.
There's just I'm so excited about this market, Dave, that it worries me. And I talk about this on BitLab on the stream all the time. Also on my Twitter Spaces, Crypto Answered, that you have to know thyself. I think there's not many things in my life that have taught me more about myself than investing money and also having a bias within that. It's humbling, it's eye-opening, it's exciting. It makes everything so. And it goes back, I think, to those three-legged stools.
Right, but there's one very important reason. So if you ask yourself the question, why is it that Renaissance Technologies and Two Sigma, I used to work for Two Sigma for 5.5 years, so I understand, why do they outperform the average investment company? The answer is because when you're quantitative, yes, you might be doing a really good job going through data to find signals to trade, but arguably the most important part of it is your discipline. And so let's just put it this way. Dopamine and trading profitability do not mix. I listen to Crypto Banter, and Rand does a great job of making this point. He says people get hooked on dopamine, and that's why they buy certain assets. But the flip side to that is people may buy assets for a trade, and nothing has crippled people more over the long run than buying something for a trade and turning it into a long-term investment because it falls, and your investment thesis is gone, and you keep it. And so you end up with this stuff that instead of losing 20%, 30%, 50% of your money on a bad trade, you lose 95%. And that becomes a killer. So when people ask me for advice on trading, I always start with the word discipline. Why? Because of that. But all three legs of that stool matter. And, look, for anyone who cares, not that I'm going to shamelessly plug CoinRoutes, but we're in the process of very soon. We're doing a soft launch now We will soon have a product. We're codenaming it CRX for individuals. When we launch the page, I will happily share that link with you. And this will be a product that individuals can use to get better overall execution. And, it's going to focus on derivatives at first, which is mostly which is obviously outside the United States. But that's something that matters. But the same thing, there are plenty of products that help you figure out portfolios. There's lots of really good traders who will give you discipline and tight stops. My biggest advice to people is listen to that. Don't don't let that dopamine overrule what you think overrule your common sense and what you actually had as your investment thesis.
Yeah, man, I'm looking forward to to talking with you more. Again, I follow you. I've been appreciative of the takes that you have in the market, and I think it's an important reminder for everybody out there that's watching. First off, you're ahead of the game. I talk about this regularly. I think we just ended Epoch One, the early adopter stage. That was the Wild West. We literally just started the real early adopter stage. That's big money because now we've got that stamp of approval. It does mean things might change, but we need to make sure that we don't say, "Man, the price is high," because it's 60,000. The price has so much more room to go. Thank you, Dave, for coming on. Thank you for spending your time with us. Do you have anything else that you'd like to share, or anywhere that people should look you up?
Well, I mean, I'll constantly have different things every day, but I sincerely appreciate the opportunity to talk with you and your audience. I can be found at Dave Weisberger1 on Twitter, or if people are interested in CoinRoutes, www.coinroutes.com works. As I said, there'll be a new website, which I will tweet. So if you follow me, you'll know when individuals can get into the game. And when we talk about that game, just so people understand it, we're talking about a system that allows you to, with one click, say, I want to buy X, and have the system figure out how to break the order apart. If it's a large order, where to place it, what price to do it at, what exchange, you can tell it what exchange or not, any of those things. But literally anyone who sat on any exchange and had to start typing in prices because they want to be, you don't have to do any of that. The system will do it for you and will do it far better. So that's really the point. And that's going to be the next evolution of trading. Whereas the next evolution of investing, as you so said, it's the institutions are coming to normalized markets. And there's so much more to unpack there that I don't want to go down that rabbit hole.
Well, I appreciate it. We're going to be talking a lot more, Dave. I hope you have a wonderful weekend. I hope you get either that boat repaired or a new boat from these wonderful investments that you've been doing over your life. You've been doing well, and I feel honored to pull a little bit of wisdom out of your head and share it with the audience. So thank you again for being here, and that's all we got. Everybody, hit that like button, hit that subscribe button, ding the bell. Make sure you go find at Dave Weisberger1 for more information there. And of course, coinroots.com. Is that correct?
Correct.
And with that, everybody go get outside. Yes, you learned something. Go kiss a tree, hug a puppy, get some sunshine on your back. And that's all we got for today. Thank you again, Dave. Appreciate you.
Take care.
You too. Bye-bye.
Bye.